Hello traders, welcome to another episode on how to trade with technical trading indicators. In this video, I'll show you how to use the MACD based price forecasting indicator to detect market trade opportunities. The MACD based price forecasting tool is an innovative price forecasting method based on signals generated by the MACD indicator. The forecast includes an area to help traders determine where prices can develop after a MACD signal. The forecast returned by the tool allows users to obtain a general picture of how price tends to progress after a specific MACD signal. The forecast is constructed based on percentiles of previous price progressions done after a specific MACD signal is generated. To apply this technical indicator to our price chart, we need to search the keywords MACD-based price forecasting. Select the MACD-based price forecasting by LuxAlgo. Before we proceed to learn how to use this technical indicator to detect trade setups in the market, we must understand the indicator parameters functionality. Let's check the indicator settings. Here's how to do it. Place your mouse on the indicator and right-click. Navigate to select the settings option. Under the MACD settings, there is the fast length of the moving average used to compute the MACD. Slow length, the slow length of the moving average used to compute the MACD. Signal length of the MACD moving average. Trend determination, method used to determine a trend direction from the MACD. Users can change which condition is used to generate MACD signals from the trend determination drop-down menu, with MACD determining trends based on whether the MACD is positive, uptrend, or negative, downtrend, and MACD signal determining trends based on the position of the MACD relative to its signal line, with the MACD above the signal line indicating an uptrend, else a downtrend. Users can introduce bias to the forecast by changing the average percentage setting, with values above 50% introducing bullish bias and below bearish bias. Under the MACD settings, there is the maximum memory. This determines the maximum amount of prices recorded at each step succeeding a signal. Lower values will return forecasts with a higher degree of variability. Forecasting length. Forecasting horizon in bars. This value only serves as a limit of the forecasting horizon and might not be reached depending on user-selected MACD settings. Top percentile. Percentile value used to determine the upper bound of the forecasting area. Average percentile. Percentile value used to determine the forecast. Lower percentile. Percentile value used to determine the lower bound of the forecasting area. It can be possible for the forecast to highlight potential reversals depending on the selected forecasting horizon, as long as reversals can be observed on trends detected by the MACD. The forecasting area can help visualize the area that will likely contain price after a specific signal. The area width is based on the top-bottom percentile settings, with a higher top percentile value returning a higher top bound and a lower bottom percentile value returning a lower bottom bound. These areas can also serve as potential support resistance areas. How does the MACD-based price forecasting indicator work in the market? This indicator works on the concept of the MACD indicator. Let's apply the MACD for an easy understanding of the indicator. As we can see, whenever the MACD histogram turns green, the MACD-based price forecasting indicator shades a green color underneath the price, signifying bullish interest in the market. Likewise, whenever the MACD histogram turns red, the MACD-based price forecasting indicator shades a red color above the price, signifying bearish interest in the market. How can the MACD-based price forecasting indicator be used for the continuation of trends in the market? For the continuation of an uptrend with the MACD-based price forecasting indicator, traders need to watch out for a bearish swing pullback in the uptrend. One of the technical tools that can be used with the MACD-based price forecasting indicator is the Fibonacci retracement tool. Traders should watch out for a possible bullish interest buildup at the 61.8% or 50% retracement level. Finally, the formation of a green shaded color underneath the bullish swing of prices will confirm a bullish entry. Whereas for the continuation of a downtrend with the MACD-based price forecasting indicator, traders need to watch out for a bullish swing pullback in the downtrend. Traders should watch out for a possible bearish interest buildup at the 61.8% or 50% retracement level. Finally, the formation of a red shaded color above the bearish swing of prices will confirm a bearish entry. How can the MACD-based price forecasting indicator be used for the reversal of trends in the market? For the reversal of trends, traders need to see the change in market structure before looking out for a possible reversal in the market. For the reversal of a downtrend to an uptrend, the bearish market trend has to be voided. In a bearish trend, the market will form lower lows and lower highs. That is the characteristic of a downtrend. Once the last lower high is broken, the traders need to watch out for price pullback to form a new higher low. Next, a strong bullish swing is needed to indicate a possible bullish buildup. Finally, the formation of green shaded color under the price will give the formation of the bullish setup. Stop loss should be set below the higher low in conjunction with the green shaded color below the price. Take profit can be set at the next resistance structure in the market. Alternatively, traders can close the buy setup once the indicator pops up a red shaded color above the prices in the uptrend. For the reversal of an uptrend to a downtrend, the bullish market trend has to be voided. In a bullish trend, the market will form higher highs and higher lows. That is the characteristic of an uptrend. Once the last higher low is broken, the traders need to watch out for price pullback to form a new lower high. Next, a strong bearish swing is needed to indicate a possible bearish buildup. Finally, the formation of red shaded color above the price will give the formation of the bearish setup. Stop loss should be set above the lower high in conjunction with the red shaded color above the price. Take profit can be set at the next support structure in the market. Alternatively, traders can close the sell setup once the indicator pops up a green shaded color under the prices in the downtrend.